But China is a different story. A 10% tariff on Chinese imports went into effect at midnight. China retaliated immediately, a 15% tax on U.S. coal, 10% on U.S. crude oil, and large displacement cars.
Yes, again, going exactly by the playbook like clockwork. At 1 p.m., seconds after that, China released its slew of countermeasures, pretty extensive this time round compared to the previous round in February. They're targeting up to 15% tariffs on a list of U.S. goods.
Welcome to our channel. Alright, so we're going to try and unpack this pretty wild story about Tesla. Yeah, you know, we're looking at a company that was unstoppable, just an absolute giant, and they seemed like they could do no wrong. But now, Tesla's market cap has just completely cratered. We're talking over $800 billion, just gone in less than 6 months. I mean, that's not just a little dip, no, it's a full-on collapse. It feels like a total collapse, honestly. We're going to try and figure out what happened. What are the core reasons for this? We've got some really fascinating information from our sources that touches on everything. We've got some stuff about the dynamics of the EV market in China, some rising tensions in international trade, and even potential shakeups in the global financial system. Yeah, it's really a story with so many different layers. It is, and it does seem like, from what we've been reading, a bunch of different challenges are hitting Tesla at the same time. Some of them are specific to Tesla, while others are much broader, like global economy kind of stuff. Absolutely. I mean, it's fascinating to see how interconnected all of these issues are. You know, Tesla's situation didn't just happen out of nowhere. It seems like it's tied into all these bigger trends and events happening all over the world. Yeah, for sure. So maybe let's start by talking about China, because it seems like a lot of this pressure is coming from there. I mean, China's the biggest market for EVs, right? Absolutely, it's the biggest EV market in the world. Our sources point to a couple of major issues in China that Tesla's facing. First, you've got tariffs. So, you know, when the US slapped a 10% tariff on Chinese imports, China retaliated, right? And part of that retaliation was a 15% tax on US coal, a 10% tax on crude oil, large vehicles, things like that. But the bigger issue for Tesla is the increase in import taxes, specifically on foreign electric vehicles. Got it? Okay, so let's talk about these EV tariffs. How are they actually impacting Tesla? So, the China Customs Administration, as of December 2024, raised the import tax on Tesla's more expensive models. So we're talking about the Model S and the Model X, from 15% to 25%. And here's the thing, Tesla depends a lot on imported parts for their cars, parts from the US and Europe. So what happens is, these tariffs make it way more expensive to build the cars in China. Ouch. So basically, it's like a double whammy. It costs more to build the cars, and then the price tag for the customer is higher too. Exactly. That can't be sustainable, especially in a market like China where the competition's so fierce. Right? Could Tesla potentially absorb some of those costs, or are they just looking at a fundamental threat to how profitable they can be in China? That's the million-dollar question. I mean, they could probably absorb some of the costs in the short term, but in the long run, it's really going to squeeze their profit margins. And that's not even the whole story. Because then you look at the competition, you know, our sources show this really stark price difference. Like, a Tesla Model 3 in China is going for about $43,000. Okay, but a similar electric car from BYD, which is a Chinese company, is selling for around $30,000. That's a huge difference. Yeah, $13,000, that's a massive difference. It is. It kind of makes you wonder, what makes Tesla stand out in that market if they can't compete on price, you know? Right, and it seems like Chinese customers are definitely noticing this price difference. Okay, Because in 2023, BYD sold over 1.2 million cars in China. That's 25% of the entire market. Meanwhile, Tesla, they only sold about 350,000. Wow. So Chinese consumers are really leaning towards those domestic brands. They are. I think what these numbers are telling us is that local companies have this built-in advantage. They know the market and they know how to keep prices down. Tesla's going to have to completely rethink their strategy if they want to stay competitive in China. Those numbers paint a very clear picture. So, what happens if Tesla doesn't adapt or make some big changes in China? What's the worst-case scenario? Well, according to what we're seeing, if they don't change their pricing and their technology to fit what Chinese consumers want and can afford, they risk basically losing their foothold in the biggest EV market on the planet. Got it? Okay, so China is a big problem for Tesla, but that's not the only place where they are struggling, right? Yeah, we've also got these reports of shrinking market share in the US and Europe. Yeah, definitely. Their market share in the US has dropped quite a bit. In 2020, they had a huge 79%, but by 2023, it was down to 54%. And Europe is even worse, sales are down 30% there. 54% is still a big chunk of the market in the US, but it's a pretty steep drop. What's causing this? Is it just more competition, or is there something else going on? Well, sure, part of it is definitely competition. You've got all these established car companies and new EV startups that are coming out with some pretty good electric vehicles. But there's this other thing. Our sources point to Elon Musk himself and all those controversial things he's been saying. They say that's been turning off a lot of Tesla customers, and it's hurting the company's image. Yeah, it's not just about the cars anymore, it's about who's running the company and how people feel about them. Yeah, exactly. It makes you wonder about leadership in general and how that affects brand loyalty. It's huge. You know, at the beginning, Tesla was more than just a car company. It was about innovation. It was about this vision of the future. But that story seems to be changing right now. Some people see Tesla as falling behind, and that kind of shift in how the public sees you, that's really tough to turn around. It really is. So, with all this going on, it makes sense that investors are getting nervous. Our sources mentioned a drop in investor confidence, right? Yeah, and what's happening with the consumers is mirrored in the financial markets. The people who used to think of Tesla as this guaranteed money maker now see it as a company with a whole bunch of problems. They are worried about those rising production costs we talked about, and they are seeing that demand for Teslas is slowing down in important markets. That's a big red flag for profits. Absolutely. If each car is costing more to make and they are selling fewer cars overall, that's a big hit to their bottom line. Right, and I imagine those tariffs in China aren't helping. Not at all. And it also makes it a lot harder for Tesla to maintain those high production numbers they used to be known for. Right. It's just this complicated mix of factors that are hurting their finances. Okay, so Tesla's got these internal problems, and they are struggling in some key markets. But like we said at the beginning, there's also this whole bigger picture, right? Our sources mention some pretty major shifts in the global economy that are adding to Tesla's troubles, and I really want to talk about this whole thing with the BRICS nations and the US dollar. That feels like a game changer. It is. It is, because what we're seeing is a real challenge to the US dollar as the world's main reserve currency. Like it says here, that in early 2025, former President Trump basically threatened to slap a 100% tariff on everything coming from BRICS countries, so that's Brazil, Russia, India, China, and South Africa, if they try to do business without using US dollars. 100% tariff? That's pretty aggressive, isn't it? It is. What's the reasoning behind such a huge threat? Well, for decades, the US dollar being the main reserve currency has given the US a lot of power. It makes it cheaper for us to borrow money, and it gives us a lot of influence over the world economy. So this threat is basically a way to try and stop anyone from ditching the dollar, especially major players like China. But the fact that he even had to make that threat means that the BRICS nations are serious about finding alternatives to the US dollar. Right, absolutely. They are actively looking for ways to rely less on the dollar, especially China. And if they pull it off, it could have massive consequences for the US economy. Okay, so, how bad could it be? What's at stake here if the dollar loses its top dog status? Well, our sources say that it could lead to all sorts of problems. It could become way more expensive for the US government to borrow money. We could lose a lot of our power on the world stage, and we could see a decline in our overall financial influence. Because the thing is, the global financial system is built around the US dollar, right? And China is not just talking about moving away from the dollar, they're taking action. They're stockpiling gold like crazy, right? Yeah, they've been selling off their US Treasury bonds and buying tons of gold. I mean, in 2024 alone, they added 250 tons of gold to their reserves. 250 tons? Yeah, that's a lot of gold.